If you're trading mean reversion or you're interested in trading mean reversion, stick around because we'll look at the best tools, indicators and setup on MT4 if you're a mean reversion trader. Stay tuned. Hey guys, warm welcome to you. Thank you for joining me. All right, so mean reversion is the act of waiting for the market to become stretched, fading that move, finding the right little sweet spot. We'll talk about that in a moment for rotation back to some kind of mean, whether that is a fixed support level, whether it is the open, whether it's the close, whether it's a dynamic level like a moving average. The mean reversion is super popular, guys. It's one of the most effective ways to trade. Now, a lot of people focus on momentum, which is fine, but you know very often markets are stretching, they're faking out, this kind of stuff. So mean reversion, if you can get a handle on a couple of good setups and strategies, it's good. So we're going to look at some ways of perhaps setting up some indicators and tools and stuff in MT4 for mean reversion type trades. This video is sponsored by, they use MT4, they also use MT5. There's a link to the description below. Go and check them out if you're in the market for a new broker, market for a backup broker, or if you're new to trading and you're kind of weighing up your options and seeing what's going on. Just make sure if you're weighing up your options that you are looking at a regulated broker, which of course is regulated in various different countries. Go and check them out, link to them in the description below. So hit the screens now and let's see how we can really fine tune and look for the best indicators and tools and techniques if you're a mean reversion trader on MT4. Alright guys, so I'm in the MT4 platform here. This is an HYCM account within MT4. I've got Euro USD daily chart up here. Just keep it full screen just for clarity. So mean reversion is we're looking for markets that are stretched and they're going to come back in the direction they came from. We're not looking for a continuation like a breakout, for example. This is a great chart as an example, and I appreciate we're going to be doing some hindsight stuff here, so let's not overthink this and just look at it as a reference. But really what we'll be trying to do on a mean reversion type environment or strategy is, you know, this is a perfect kind of environment really. We're looking to frame areas where we think the market's going to run out of steam. So, you know, we're looking to these kind of things that run out of puff and rotate back in. Yes, appreciate cherry picking a little bit here. We've got hindsight, but this is the sort of thing that you would look for. And if you're going back to the MT4 platform, your mean, if you like, would be something like that. So you would start to say, okay, we've got a static mean. We've been in this range bound condition. Anytime we come away from this mean, I want to look for some kind of signal to get back in the direction of the mean. So in other words, as we come away, we're looking for an outside in type trade. Are we stretched away from the mean? Yes. Are we kind of putting wicks and stuff like that under lows? Yes. Okay, well, let's look to get long. Are we doing the same thing here? Have we got some highs? Can we work that off the mean? Are we stretched from the mean? Is this a sort of thing that tends to fail? Yes, it is. As it starts to come back in, are we shorting it here? That's the sort of thing we do. Then eventually, you know, we do it here and we get stopped out, and that's when the breakout guys are making their money and the mean reversion guys are getting stopped out. But that's fine, because you can see mean reversion here for, you know, very many months works far better than buying breakouts or selling breakouts. You're shorting breakouts, you're getting stopped. You're going long, you're getting stopped. So the right environment, mean reversion is great. Anyway, let's look at some of the better tools indicators that we can use. So there's something to be said, guys, purely for static lines. You know, don't underestimate how powerful they can be. Let me just see if I can grab that one, because they really, you know, frame the reference, and with static lines everybody's looking at them. Now indicators are great, we'll look at those in a second, but with a static line everyone's looking at it. So when you've got it at a high, when you've got it at a low, and then when you've kind of made a reference midpoint, and in fact, you know, very often, and this is, sometimes you think it's coincidence, but this happens very often, you know, the midpoint between the two, or approximate midpoint between the two, as we can see here, is very often a support and a resistance as well. So appreciate we are hindsight looking at this chart here, but that occurs more often than you think, especially on different time frames as well. You know, when you've got your highs and your lows and you're framing your midpoint, you think, wow, actually that's become resistance and support. That then becomes your mean. That is what you would use as a mean. So that's your mean, and then these are your kind of extension levels that you'd look to potentially initiate a trade. Not always, but potentially. Right, so what indicators are going to help us guide you know, what we were trying to do, what we're trying to achieve? So oscillators are pretty good, and I like the stochastic and the RSI. So stochastic, you've got parameters that you can adjust and play with. I don't think there's you can tweak and adjust them, but I'm always a big fan of, hey, just stick with the default for now, and then when you want to kind of play around with it to fine tune things, then you can start looking at the parameters. So we've got the default settings here: %K 5%, D 3, simple moving average is the method, a high low, slowing 3, maximum. We'll adjust those in a moment. So let's just put it on default and see where we are. Okay, so the idea with mean reversion is we're looking for stretched markets. Very great terminology there, but that's what we're looking for. Buyers that are buy, and then they run out of steam, and what happens is it mean reverts back to where it was. Now, it doesn't always have to be in a flat channel like this. We can have a scenario where we are in an uptrending channel, and we can still trade mean reversion, and we still can use tools like our stochastics, like our RSI, like our CCI, those kind of things to judge where these turns may be. And in this case, the mean would just be a kind of line moving up or a moving average if we wished. But it's the same kind of thing, and we'd still get the similar readings on the indicators we're going to look at in a moment. So stochastics up here, pretty self-explanatory, and there is a danger that it oversimplifies it when we're looking in hindsight and stuff. And you say, okay, well, look how nice this is. You know, when we go oversold, and oversold, by the way, guys, anything kind of below 20 is considered oversold. Anything above 80 is considered overbought. So yes, it looks really nice in hindsight here. You know, as you come down into 20, you're oversold. There's your buy. Thank you very much. As you push back up into overbought, there's your buy, etc., etc. Now, okay, you've got to look at these kind of things and say, well, actually, you went oversold here, which really gave you a lot of pain. But if you're using your static level as well, that's not really an extension. So you start to add two bits of criteria. One bit of criteria might be your static line, which we just kind of put here. The second criteria, and you have to excuse my mouse here, second criteria is that we have an oversold condition. So we're oversold if we're below this line, and we're overbought if we are above this line. So now we start to look at some of the tools and ideas that we can use for mean reversion. Does it necessarily mean we always pull the trigger? No. Maybe we add a third criteria which says as the market comes back from overbought. So, okay, we are above our line here. However, we've drawn this. So let's say, for example, here, we're now overbought as well. And we now wait until we come back off overbought, so off the 80, to enter our short trade, and our stop is above the highs. Again, no recommendations, just observing and kind of just looking at this chart here on the screen and kind of seeing how it would all fit in. Same kind of thing. And then eventually, of course, you know, you're getting stopped out on this. So if you are, let me clear those off. If you are in a situation where you have a bit of a trend and a pullback, you can still use this, but maybe you're now looking for the first oversold condition after a move lower. Now, one thing to add finally, before we move on, guys, is if we are looking at this, we might want to add another level with stochastic, which is the midpoint, which is 50. Okay, because the midpoint helps a little bit guide us, and we can kind of theorize that we should be at the middle of the range and the midpoint should be there. If we're overbought, we're still not that interested. We want to wait for it to kind of settle down and relax a little bit. So we've got our rules, we've got our ideas. So RSI is a great one to use. Stochastics, that we've got up here, is a great one to use. And CCI is another handy one to use as well. I think those are the ones to focus on. You know, in conjunction with things like your horizontal lines or, you know, your trend lines. If you want to draw trend lines, again, like we said, doesn't necessarily have to be a flat and, you know, very in a square or rectangle type rotation. This can still be valid here. Now you might have to adjust the way you approach things differently. Like for this example here, you might say, okay, well, we're in a downtrend. If we can push back and if we imagine that we won't even look at this horizontal line at all, you know, let's just clear that for the moment. Imagine we were just looking at this section here now on our chart. Okay, we're downtrending, great, mean reversion. We can still play the game, but maybe we won't get as high as we want sometimes. We might have to adjust our parameters a little bit. It's the same also with this drive lower and pull back. It might not ever get to overbought. Maybe we say, oh, does it get over 50 and come back? So I learned to kind of understand and reference where the price is relative to the oscillator outputs and the oscillator value, should I say, that you're getting, so that you're not diving in just because of that. That's why I like to use that 1, 2, 3 method. So you've got a static level, you've got an oscillator level, and you're waiting for an additional confirmation to get into the trade as well. All right, guys, whatever you do, keep your risk managed. Take care. This video is sponsored by, there's a link in the description below. Go and check them out if you're in the market for a new broker or considering switching or just fancy a backup. Take care. Bye bye.